We will keep at it until we're confident the job is done. Thank you.
And that was Fed Chair Jay Powell giving his comments at Jackson Hole and in their symposium. In those comments, the Fed chair saying at some point it may be likely that they will slow the pace of increases, but that is not anytime soon, at least right now, saying that they are going to keep on the same path as of right now, not the time to stop or pause, his exact words there. Been keeping an eye on some of the sectors and the movement that we've been seeing over the course of the day. Let me zoom back out, though, very briefly, just to give you kind of a setter of where exactly the major averages are at and where we've moved even off of those comments. You see that stark move lower on the Dow Jones Industrial Average, net down by about 0.2% right now. The NASDAQ Composite Tech Heavy Average, that also took a sharp drop off as well in just those comments. And in that period of time, as of right now, we're down by about 0.3%. And then additionally checking in on the S&P 500, you're seeing that all in down by about 0.25%, 0.2% right there. And getting back to some of those sectors, really to see what they're latching onto at this point in time, we've actually seen a little bit of a movement here as well. XLE, that was one of the only bright spots right now, up by about 0.6%. But you're seeing more decliners than advancers as of right now. We'll continue to keep a close eye on this, as well as some of the movements in bonds as well, which we'll come back to in a hot second. I do want to zoom back out to Jackson Hole, and let's go to Brian Cheung, Yahoo Finance's own. Brian, what did you take away from Fed Chair Jerome Powell's comments?
Yeah, well, Brad, first of all, a few things to note here. This is an unusually short speech for Jackson Hole. Usually the remarks that are made by the Fed chair at this annual event tend to be longer, sometimes as long as 30 minutes. They tend to also be bigger picture in scale. It's a fairly academic crowd that he's speaking to. But this speech was very different, only about 6 pages. He cleared through it in about 10 minutes or so. And he said right at the top of the speech that he wanted to have a more direct message. And you're already seeing markets apparently getting that message, extending their losses so far this morning. But the key phrases from this speech, as I see him, is that we will keep at it until we are confident the job is done. And that falls in line with the fact that he said they want to maintain a restrictive policy stance for some time. If anyone had any fears about what that translates to in terms of rate policy, the Fed chairman spelled it out for them, said that it's not a time to stop or pause the interest rate increases. There had been a lot of speculation after the June meeting where they hiked by the largest increment since 1994. That was 0.75%. As a reminder that maybe the Fed at some point would stop those interest rate hikes and then at some point, perhaps even next year, start to cut rates. The Federal Reserve trying to basically say, don't price anything in right now because they want to keep that restrictive policy stance for some time. What that means, a little bit vague. Now, in terms of other things that he mentioned, really, he said it's all about inflation. They're not afraid to have the unemployment picture reverse a little bit. Obviously, 3.5% unemployment as of the July jobs report, showing that the jobs market is still strong. But he said there's going to be some pain for households in the future and that they need to do whatever they can to get inflation down to preserve their price stability mandate. That suggests that the Fed is not afraid of seeing unemployment tick up and that if they wait even longer, as he said towards the end of the speech, that could actually risk even steeper job losses. That's why they have to move fairly quickly. Obviously, all of this ahead of that Fed next meeting on September 20th and 21st. We don't really have any sort of tea leaves to read in terms of whether or not that'll be 50 or 75 basis points. But if you kind of read the speech in totality, it suggests that the Fed doesn't yet see the case for making those interest rate increases smaller in increment. But again, the key words that the Fed chairman said that are new in this speech, that, by the way, he repeated twice, job not done. It kind of reminds me of the 2009 NBA Finals when Kobe Bryant said, job not finished, right? That's exactly what this is all about here. Federal Reserve saying they are far from handling inflation. They want to continue to raise interest rates.
Good stuff, Brian. Really appreciate it. Guys, the very, I would say, interesting speech. You saw markets come off the lows of the section. I actually went green briefly on the Dow. I didn't really see anything dovish in anything Powell said, but for him to say, we see restrictive policy for some time. Wow, that was pretty forceful. If he's looking to break the grip of inflation, like he said, I mean, he sure gave it his best shot.
Look, it was very direct comments, as Brian was saying, and Powell wasn't mincing words like we may have seen in the past or using fluffy language that was trying to give or at least maintain credibility. He also addressed the fact that the Fed was trying to maintain credibility for a certain amount of time, but at the same time, now coming out and saying we need to be direct and transparent with everyone about where things stand, talking about individual households, small businesses, how some of those policy decisions may impact them, because that's the transparency that everybody is looking for to best prepare themselves, their businesses, their individual households, because everybody else, as we were discussing yesterday, and actually throughout the course of this week, everybody is feeling inflation in a different way. And so it's just a matter of how they are taking their own preparatory measures as well, in the event that they may be bracing for some type of impact, as we've heard from
I'm just kind of chuckling to myself and shaking my head here because, look, it's not unusual for markets to gyrate after a Fed decision, after commentary like this, but it is in a way too. I mean, we saw yields come down and then go up a little bit. I mean, It's in a pretty tight range. Stocks are in a pretty tight range too. But for what seemed like pretty clear commentary, there's a lot of confusion. Supposedly, apparently, if you look at the reaction to these comments, which is kind of interesting. I mean, it's also interesting because I think there certainly have been times in the past where Chair Powell or the other Fed chairs, for that matter, make what they clearly think is a very unambiguous statement, and then the market doesn't always take it that way. So it'll be interesting to see what happens.
I think how the market really feels about this, excuse me, will come on next week, Monday or Tuesday, as we had a weekend to digest this. But again, I mean, when we hear the Federal Reserve chief say, we're going to keep at it until the job is done. We're going to beat down inflation until it hits our target. He not only took a pause on rates off the table, but you could see a Fed likely continuing to raise rates deeper into 2023.
You know, it's interesting, too, the global aspect of this that he weaved into the conversation, saying that high inflation is actually a global phenomenon right now. And so that is an acknowledgement to what the policy decisions have been around the rest of the world as well, to either in one part of the world try to jumpstart or spur spending, as we had seen in Asia Pacific and China specifically, for a different set of reasons. But at the same time, that could also have a larger inflationary impact later on down the line versus the European Union and the ECB and the decisions that they're going to have to be making as well in the near term to combat inflation. And so that global phenomenon, a direct nod to exactly where Fed Chair Jay Powell believes that the U.S.'s and the U.S. Federal Reserve Bank's strategy sits in that broader context at this time, too.
I have one more sort of market plumbing structure comment to make as well as we look at the reaction here. Volume is still low. It's still August. Yeah. A lot of people are still away. People are not coming back from their trading desks or trading from home just because Jackson Hole is happening necessarily. I'm looking at some of the volume figures. If you look at, for example, S&P volume versus the 100-day average at this time, it's still about 20% below the usual volume. If you look at it versus the past 30 days, you're still looking at about 15% lower. We are still a summer Friday, right? So so in other words, if we're looking for confirmation that this is the reaction to the Fed, look at the September meeting reaction as a little bit more, quote unquote, real than what we're seeing now, or broader, more participatory than what we're seeing right now. Just a small note here for what it's worth.